Hi everyone, welcome to my channel Trade with VK. My name is Vishwas. Today let's learn about basic concepts of SMC. SMC is nothing but smart money concept. So there are two things where people trade on different concepts. First one is price action. The second one is smart money concept. So price action is actually based on how market moves, what is the volume, how many people are buying it, how many people are selling it, based on the structure. But smart money concept was developed using few concepts of prize money concept, which actually involves mostly big time investors, institutional investors. So where they invest in huge money like 100 crores, 1000 crores, 500 crores. So we are majorly concerned about those locations where they are reacting to the market. So based on that, the smart money concept was developed. Before we could continue with this video, if you have not already subscribed to my channel, please click on the bell icon to subscribe and do like and share this video. Okay, let's get started now. Let's start with candle formation or what is candlestick. Candle form in 5 minutes and based on the starting point, ending point of the candle, it is decided whether it is going up or going down only for that particular candle. So if it is going up, we call it as bullish. If it is going down, we call it as bearish. So here if we see a green candle, so it is going up. So when the candle is going up, the bottom is the starting point and the top level is the ending point of the candle. Similarly, in red candle, when you see a red candle, this is not the starting point. Since it is going down, this is the starting point. Whichever is upside is the starting point. Since it is coming down, this is the end of it, where the candle has closed and started with the new candle. And this, whatever you stick you're seeing, this is called VIX or Volatility Index. So this stick means the candle opened here and it tried to go down, more buyers compared to sellers. Again, it went back. Same way here, the candle opened here and it came down and so slightly it went up. So whichever side of the stick you're seeing, so the candle had been up to that price after it opened. If you see here, there is a big wicks and there is a big resistance here. So the candle opened here with a positive price, bullish price. It opened here. It became a green candle until here. But before the 5 minutes candle could close, it came back to opening price and came down further down. It became a bearish candle. So always do remember you should not enter to any uh, trade without the candle getting closed. Let's say somebody who traded here. So it was a very big green candle. Assume that the market might go up and enter. And it came down almost like, let's see the top point. Highest point here is, here if you keep the cursor here at this location, you can see OHLC. OHLC is nothing but open, high, low, close. So if I keep the cursor here, I'll be able to see high was 66,930. So it almost came down for 200 points, which is very huge. And the person who entered trade without the candle being closed here would have lost his amount. So always do remember, don't, I know you will be tempted when the market is moving all of a sudden upwards, but we have to avoid that. So we can use the term as FOMO. So we should avoid FOMO. FOMO is fear of missing out. So that's all. There is nothing much about candle because we are mostly concerned about other concepts in SMC. That's all about candlestick. So let's go through some of the basic concepts of SMC. So one of the concept is order block. What is order block? So the name indicates there is a blockage of orders. Means I'm not talking about retail traders. Some of the retail traders like us. So order block is related to, since I already told you smart money concept is related to the big time institutional traders where they put huge money and here if you can see order block. So if order block is in the bottom of the candle, the people who want the market to go up are blocking the order block. If you see a order block on top of the candle, people who want market to come down, whom we call bears of the market, are making a order block there. So what they do, they would have already invested an amount. So at this particular point, they don't want to lose their money, which they have already invested like 100 crores, 200 crores. So they will set up a line or like in Exness or any other app, we can create a buy stop or sell stop. For example, if the market by any chance comes down and like they don't want it to go further down to avoid losses, they put some more amount here. If in case it comes down, it activates and pushes the price upwards. And this amount is not like $100 or $1,000. So it's like a huge amount. That's why there is an impact of this order block. So in price action, it is also called as support, where the market is taking support. But in smart money concept, we are able to understand why it is taking support. It is taking support because there is an order block by institutional traders. They are putting an order block here of like some quantity, huge quantity, where if the price is coming down, it will again push it back. So this kind of situation where market is again and again coming and going back upwards is called order block, and it does not mean that it will not be able to break. As you can see, after trying for many times, when it surpasses the order block, it has come down clearly. So identifying the order block is very important. In the same way, I can show you one more example of order block. See here you can see here also the market has come down. If you can see from starting from this point until here, the market is slowly coming down. Once it reaches this point, even here, it is unable to cross this level because there is a big order block at this particular location. So order block is very simple. The market tries to come down or go up at particular location. It is taking support or it is having a resistance if it is above again and again. If it is at the bottom of the candle, so it is coming down. So bullish people don't want it to go further down. So they put up order block at the bottom. Bearish people doesn't want the market to go up. Since they will make losses, they will put a order block above the candles wherever they don't want to make more loss. The next concept is fair value gap. Fair value gap is nothing but a gap which is created when we take three candles. Let's see, I've already marked it here. So there are three candles here. One, two, three. So if you see the wicks, we actually consider the wicks of the candle to draw this fair value gap. So if you see this one, two, three candles. So if I draw a box with respect to these three candles, this is fair value gap. So order block, fair value gap, everything like when the market is coming down, all of a sudden it will try to resist it. If it is not trying to resist it, it can go like either way. For example, let me show you. So how this fair value or order block works is, for example, the price is coming down. So if it is coming down and bouncing back again, and again it is trying to get back, and when the price actually crosses the candle here, like it pushes above, then it is bound to go back upwards. Or other way around, let's say if the price is successfully able to break this order block, it will again come back to touch, try to go back upwards. So then again, it will try to go back upwards, but it will not be able to cross this order block. It will actually come until here and again push back downwards since it has already crossed the order block. So once it crosses and this price which has already created and it is next time it is this candle is lower than this candle which was already formed, then the sell activates. The same way, whatever concept downwards, it is same upwards. When the price enters to the order block, it is unable to go downwards, even further down. It pushes it back to green candle. Again, it tries. Again, it pushes it back to, and when the green candle crosses the other two candles, then the buy activates. So, identifying the order block, fair value gap is very important because that's where we mostly buy and sell, because once we identify there are major people, institutional traders sitting there, we will be sure when it pushes back that it will further go up or further go down. So fair value gap, order block, very important. The other two things just to identify the upcoming sell or buy is break of structure or change of character. CHO, is change of character. So if you can see here until here, the green candles were forming. So all of a sudden there is a change in the candle color. So it's nothing but the candle character was green or bullish. It has changed it to bearish. So in simple words, it has changed the character from bullish to bearish when we see in 15 minutes candle. Break of structure. So break of structure is nothing but there is a Dow theory called, which explains when the price breaks its own higher high, it is it tends to go upwards. For example, the market comes over here. This is a high. Again, it will come down. It breaks this high. So it will go up. So again, it comes down. It breaks its high again. So this is called Dow theory. So this is smart money concept is an extension of Dow theory. So here, BOS is a break of structure. So market would have created a structure, something like this. So this is a structure. So next time it was supposed to come down and go up. When that does not happen, the structure is broke. So it has actually, instead of going up, it has come down here. So if you can see, it has it has been going up continuously. Here it has come down. It was actually supposed to go up, but if you see, it has gone until here and come down again. So it has broke the structure of upwards. So if the break of structure is identified early, so that we actually identify, so from like buying, the selling has started. So you have to, when you get used to this chart pattern, it will be easy for you to identify when the uptrend is happening and there is a break of structure or fair value gap. Fair value gap, you can take any three candles, it will work. Order block is something where you have to identify where is the huge pullback towards upside. So these are the few concepts of smart money. These are today's topic. So guys, please let me know, comment in my comment section, like and share the video. Don't forget to subscribe. Thank you.